All right, let's talk about silver. There's a really powerful argument building right now for a major revaluation in its price, and some are saying it could be the start of a brand new supercycle. So let's get right into the data and see what all the fuss is about.
Okay, let's just dive right in with a statement that really sets the stage. The source material for our explainer today makes this incredibly bold claim. It's framing a triple-digit silver price not as some kind of wild guess, but as just basic common sense. So over the next few minutes, we're going to unpack the key arguments that lead to a conclusion like that.
So where does a story like this even begin? Well, it starts on the price chart, with a technical event that has been building for nearly half a century. And we're not talking about some minor blip here. Analysts see this as a huge fundamental shift in how the market is structured.
What you're hearing about here is something called a cup and handle. It's a classic chart pattern that traders look for as a signal for a powerful move up. But what's so incredible here is the scale. I mean, this isn't a pattern that formed over a few weeks or months. This one was 45 years in the making. For decades, that $50 mark from back in 1980 was like a concrete ceiling. The fact that silver recently broke above it is seen by many as the official start of a new long-term bull market.
Now, a breakout like this is a big deal, but to really get a sense of its potential, it helps to look at the past. We actually have a blueprint for what can happen when silver really gets going, so let's wind the clock back to the 1970s.
Yeah, this timeline is pretty staggering. As you can see, during its last major bull market, silver went from about $1.50 in the early 70s to a peak of $50 by 1980. That move right there just shows you the kind of explosive potential this metal has. It can stay quiet for a really long time, but once that momentum builds, watch out.
But here's the real kicker. The argument today is that the fundamental story is even stronger than it was back in the 70s. You know, back then, it was mostly an investment craze driven by Western markets. Today, it's a completely global story. You've got massive industrial demand from things like green energy and electronics, you've got global investment demand, and it's all happening at the same time as a major persistent shortfall in supply.
So let's dig into that, because this brings us to the real core of the fundamental argument, this massive and growing imbalance between how much silver the world actually needs versus how much it can produce. The numbers here are just jaw-dropping. We mine and refine about 1 billion ounces of silver a year, but total demand is just soaring past that. Major outlets like Reuters are reporting annual deficits of over 500 million ounces for this year. To put that another way, for every 2 ounces of silver that gets supplied, the world is trying to use 3. That is the definition of a structural deficit.
You know, this whole supply story is getting more and more attention. And if you want to keep up with explainers like this one that break down the data behind these major market trends, please do like, share, and subscribe so you don't miss what's coming next.
And get this, the demand isn't just from factories making solar panels or whatever. Look at this number. Since 2019, those exchange-traded funds, or ETFs, have sucked up 1.37 billion ounces of silver for investors. Let me put that in perspective for you. That's almost 1.5 times the entire world's yearly supply, just for investment.
And you can see signs of this squeeze popping up everywhere. The total deficit just in this decade is already getting close to 1 billion ounces. We're seeing huge physical buying from countries like India, which imported 55 million ounces in just 1 month. So here's the bottom line. When you use more than you make year after year, you have to get that metal from somewhere. And that means draining the world's finite, above-ground stockpiles, which obviously can't last forever.
Okay, so we've got a historic technical breakout and a massive supply deficit. But what about the price? Is it still a good value? Well, analysts argue that even after its recent run-up, silver is still historically cheap compared to other major assets. A really classic way to measure silver's value is just to compare it to gold. The gold-silver ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. As you can see here, the historical average is around 30 to 1, while today that ratio is over 70 to 1. That suggests that just to get back to its normal relationship with gold, the price of silver would have to more than double from where it is today.
Now, comparing silver to gold is one thing, but what happens when we zoom way out and compare this single hard asset to the entire US stock market? Well, the perspective gets even more dramatic.
This ratio, which divides the S&P 500 by the price of silver, tells this amazing story of huge, multi-decade cycles. Think of it like a tug of war between paper assets and hard assets. When the line is high, stocks are super expensive compared to silver. When the line is low, silver the expensive one.
And this slide really puts it all into perspective. After hitting a massive peak during the dot-com bubble, this ratio crashed all the way down to just 27 back in 2011. And today, it's all the way back up at 121. So for this ratio to just get back to where it was in 2011, you would need either a huge crash in stock prices or a dramatic multi-fold explosion in the price of silver.
So let's just tie all these threads together for a second. We've got a historic technical breakout from a 45-year pattern. We have a historical blueprint for these kinds of explosive moves. We have a serious structural supply deficit, and we have valuations that are still near historic lows compared to other assets.
So the core takeaway from this whole analysis is that this isn't about a short-term price spike. It's being presented as the potential start of a multi-year, maybe even a decade-long cycle where tangible, hard assets, like silver, start to reclaim value from financial or paper assets like stocks.
And that leaves us with this final, really powerful question to think about. Are we witnessing the start of a fundamental shift in the financial world, where the pendulum begins to swing back toward things you can actually hold in your hand? The data certainly presents a compelling case. Thanks for watching.